Good morning, everyone. It's Monday, July 12th. I'm Marv Eisen from Timeless Dollar. And today I want to go over one of the principles of trading, a tenet, if you will, a tenet, T-E-N-E-T. Now, a tenet is a principle or a widely held belief based on past experience. One of the tenets of trading is that windows always get closed. Now, for those of you who don't know what a window is simply a gap that's formed by a market opening that's well above or below the previous day's close. And one of the tenets of trading is that windows always get closed. So I'm going to move on and I'm going to explain that in just a moment on the S&P chart. Today I'm going to start, as I always do, by looking at the economic calendar to see if there's any market moves, market making news that's going to happen during the day. And today, Monday, July 12th, nothing is scheduled. So we'll move on from there. And I always look at the morning economic news just to get an idea of if I see any indications of news that is going to move the market, particularly in a negative direction. Generally, when markets move, they are motivated by news to the positive, to the negative. So I just want to get an overall sense. And this is how I do it. You can do it your way. I look at CNBC. You could look at any other news website. You can look at the TV, the talking heads. Today, Monday, July 12th, Dow futures are down 136. S&P futures down similarly, slightly 5 points, not much. NASDAQ futures are up. And as you all know, NASDAQ leads the market. Particularly the 10-year bond is trading at 1.344. Now, the bond market is basically saying something to us contrary to what the stock market is telling us. The bond market is saying that business outlook to the future is not as rosy as people might believe or as the stock market might indicate. Going further down, Dow is set to retreat from a record with futures down. Well, that's just a repeat of the basic metrics of the market that we see up here. It's not bad news. It's just news telling us what we already know. Looking further down the news, I don't see anything. Congratulations, Sir Richard Branson, for his trip to space. But certainly that's not going to be a market mover. And further on down, there's news about individual issues. Nothing major that's going to be moving the market. Now let's move over to the S&P. And today I'm going to do something that I'd like to do when markets make significant moves that result in windows. Now on July 7th, this is July 7th right here. This is a 15-minute chart of the S&P. And I like to look at the S&P in chunks of time, in 15-minute intervals, because it gives me a big picture. Now here on July 7th, the market closed at 43.57, and on July 8th, look what happened. The market opened up significantly lower, 42.94, from 43.58 to 42.94, a little more than 60 points down on the S&P. And this caused a gap or a window to open, and this is something that I wanted to really discuss today because the tenet of the market is windows always get closed. Now, does that mean that the market is going to immediately shoot up, back up to 43.58? Not necessarily, because sometimes windows don't close, or when they do close, they don't close immediately. It could take several days, maybe a week, or even more. But the window will eventually get closed. We just don't know when. So what happened on the next trading day? Now, the next trading day, July 9th, the market opened at 43.37. So the market opened up about 30 points. Let's see, 43.19, 43.40, about 20 points higher on July 9th. But do we know that the market is going to, that window is going to close? Well, ultimately, I'm showing you the chart, so you see, yes, it did close. The market shot up, and it closed actually above where it closed on July 7th. So the market basically closed even higher than when the window first formed. Why did the window form? Well, the window formed in this case because of talk about COVID-19 causing new infections, serious new infections because of the Delta variant. And so that put a damper on the market. And that caused the window to close, this window to open with the market significantly down on the 8th. There was no way of knowing that that this window was going to close, and I'm going to show you why. Let's go to the Emini future on July 9th, and I'm going to go to the open at 9:30, and this is a 3-minute chart. 9:30, right about here. Okay, so the market opened at 9:30, right here at about 43.30, and the market basically, this is there's 4 points between each horizontal line in this chart. The market gyrated about 8 points for the first 10-12 minutes of trading, and while in hindsight, we can see the market was trending up for traders that were actually trading at the open of the market. Look at this. Look at the swings to the downside. So somebody who bought the market at the open at 43.31, the market swung down to 43.28. So this could have been an immediate loss of 3 points, and people who went long could have gotten a little nervous and jumped out. The next candle was a doji, which is even more ominous. So, and particularly with the stochastics at a high. But of course, in hindsight, we see the market did go up, and in fact, did close the window that had opened on the 7th. So the tenet that market windows always close held true here. That doesn't mean that it will always hold true. A window will often, if it doesn't close quickly, it will often remain open for days or even weeks. So remember the tenet of windows. When you see a window, you could trade in the direction of the window closing and cross your fingers, but you'll have to sustain a considerable amount of churn in the interim. So that's the lesson for today. The market is slightly down from the close on Friday, but we'll see what shakes out. Anyway, you have a safe day, happy trading, and if you're looking for some education on how to trade E-mini and micro E-mini futures, check out my course at timelessdollar.com. You won't be sorry. Thanks for watching, and again, this is Marv Eisen from Timeless Dollar. Have a good one.